Yo YouTube, it's your boy Kobus-The realist OG. I'm just gonna be doing the breakdown of the trades which I took earlier today in the morning. Okay, how did I frame those setups? Actually, I'm going to do the one of yesterday and today. Yes, and today. Okay. So this is Nas and SP500. We can see that we have been bullish the whole of this week. Okay, we see that Monday starts by expanding down during New York, and then that sets up for the move for the whole week. The whole week we've been falling like nobody's business. Okay, and this is actually one of the clearest price actions which I like. Okay, I like clean things, clean stuff. Okay, so let's break down the trades which I participated in. So it was Thursday and Friday. Okay, so yesterday, which was Thursday, I took a sell on Nas100 and what's this? And SP500. Okay. Let me actually see which one did I exactly take. Is it Nas or SP? Money. Okay, I took I don't know if you can see it, but it's here. So I took the SP500. Yeah, I can clearly see the entry. Okay, what did actually the market do? Initially I was looking at the market to sweep up this buy side. Okay, and then if we reverse, I would look for sell. I was looking for a sense of reversal right there, but what I have seen is that the market only traded on Nas. We did actually clear this. We closed the highs. Okay, on SP500 we did clear those highs. Okay, and then we fell. That was on Wednesday, but but Nas did not clear those highs, so we had some sort of like SMT divergence right there. Okay, we had some divergence right there. Let me just move it. So remember I had said we are not trying to predict the market, we are just looking at it and then reading what it fits us, and then using that information we can use it and form a trade setup based on the information presented. So we had a divergence right there. If you can check, this is Tuesday, so relative to Tuesday's high, we made a higher high on Wednesday with SP500. Okay, so and then we fell. Okay, we fell. We created this is a sell model. This consecutive green candles are an order block, and then we break down. Okay, we break the structure here aggressively, leaving a gap and an order block. Okay, so market does come back to that order block during New York session. Okay, we come to that order block during New York session, and let me just make you aware that initially it's like when the market closed on Wednesday, my eyes were on this high. I wanted to see this high get taken out during New York tomorrow or during London, and I just wanted to see this high getting cleaned out and then looking for bearish prices from there. So this is the low of the retracement, and this is Tuesday's high. It's low. Okay, I saw that during Wednesday, during Thursday we did take out that high, this liquidity which I'm just annotating now. We took the buy side liquidity. Okay, just gonna go to a smaller time frame and then check what happened. All this price action for me here, not there, all this for me, this was just I want a proper, all this price action here relative to the high. So all this was just manipulation into the order block. You see it, this was manipulation into the order block. This was manipulation into the order block. You can see how small those candles are. Okay, so at the same time I'm reading the candlesticks, and then from that, okay, I see where we create an opening gap there. We form a gap there. I think this was during, yes, I think it's the, let's see, so this is the beginning of the new cycle, time cycle, because okay, New York is divided into 90-minute cycles. The first one starts at 7 o'clock up to 8:30, and then the next one starts at 8:30 to 10, and then the last one starts at 10 to 11:30. Okay, so we see that during the second 90-minute cycle of the New York session, AM session, we create an opening gap here. Okay, and again, if you are observing, you can see that whatever we just confirmed on 1 hour, it's happening here again on 5 minutes. Okay, on 5 minutes we have a break of market structure, a liquidity sweep. This type of liquidity sweep, it's actually dope because I actually participated into this trade late. Okay, but if you can check, we have an order block here which we trade to. The order block is in confluence with with the new opening gap. Okay, the market taps the order block, rejects the 50% of the new opening gap, the new 90 minutes opening gap. Okay, and then we see that we sweep liquidity. This is one of my models, which is very dope. We sweep liquidity here, and then we create a CRT here. Okay, for me again, this is on its own, it's the closure here, right, just right here. This is an entry, a liquidity sweep with a CRT. Sometimes you don't have to wait for the CSD, change in state in delivery based. Sometimes I don't look for it because already I'm on a lower time frame. Okay, so and we had one here. So this is changing state in delivery. This is a hint. This is a big move. This gap happened during New York session. Okay, you see how the market falls heavily after trading to the order block. Is that a coincidence? Okay, so we see how the market falls heavily and then it takes time to retest while it into 930. So 930 is the one which retraces into that gap, and then I saw that okay, market is not going to feel that. The way the price is so heavy, it's not coming back to feel that 5-minute imbalance, but we had an imbalance, a retest into the into this 3-minute gap here. If you can check on 3-minute here, on 1 minute, on 3 minutes here, the CSD changing state in delivery right here. Okay, at the same time we form a gap. So this was my entry right here. Okay, closure. After the closure of this candle, I saw we closed inside this candle's range, so this forms a CRT for me again. Entry, stop loss was just above here. Okay, and then I watched the market met my target in less than a few minutes. Okay, and then we had a retracement into actually after clearing those lows, we came and retested that 5-minute gap on we retraced that 5-minute gap. Okay, and then what, market fell once more. It fell like nobody's business. So this is Thursday's trade. Let's go to today's trade. Okay, I actually have I posted another setup on Wednesday, but I'll just go into it again once I'm done here. So Friday I'm expecting what, a reversal. Okay, in my mind I was like usually, okay, let me show you something. Do you see how the market moves before New York? If we are going down, we open here and then we start by going up, and then later we go down. That mixed with like the context. Okay, obviously if you just open and go here, let's say there's nothing on our left, it becomes a little bit difficult for us to frame a trade. But in this context, we have a liquidity here, and then we have an order block. Okay, the market opens here and then start trading up into what? Into this order block. Okay, and then from there we get a reaction away from this order block, so that confirms our bias. Not necessarily bias, but like the I can say the dots are connecting, or the puzzle is connecting. But on Friday, if you can check here, I saw that during yesterday during afternoon we left this huge imbalances here, which we did not show any interest of filling. Usually if let's say I was bullish, I was bearish today, maybe I would have wanted to see the market maybe form after this big move, maybe retrace, create a high, which is engineering of liquidity, and then tomorrow clean that high while tapping maybe this gap or this, like it did here, created liquidity here, and then we fell after that. But today I was at 9:30, my eyes were focused on this high. I was bullish. I wanted to see the market go up because it's Friday. We want to form the week of the weekly candle. Hope I'm making sense right there. At the same time, I'm looking at Nas. Nas has created this relative equal highs here. Okay, and then if you can check with Nas, we sweep liquidity. This is Friday low. We sweep Friday low. At the same time, we get a CRT there. This candle closed inside this candle's range. Relative equal highs. This is a rejection candle. It's a CRT. When we go to 1 minute, I'll show you how clean this price was in the morning. I was actually from class. Okay, we see that we clean those lows, and then the market consolidate for a few minutes and change in state, then delivery happens here. Okay, we didn't close above this, but what I saw is that the market is creating these gaps, is disrespecting these bearish gaps, which under normal bearish circumstances we were supposed to respect. They were supposed to hold price down, but instead the market did not do that. And then the market when it was disrespecting those gaps, it left a gap here. Okay, this was my eyes were here on this gap. Okay, we see that the market disrespected these gaps. It closed above them here. Okay, and then we also had a change in state in delivery here, minor, and then we retrace this count, and then we take off. We clean those highs. For me, I think this was an adequate move. Okay, and then after that I just closed my PC. I was out. Okay, but I actually participated on the setup which happened here on SP500. because this was, it's again less volatile compared to Nas. We also had a change in state in delivery here, and then we had a gap in discount here. We also, this is the first gap which we, one thing I've also realized is that when a market disrespects a gap, especially when changing the state in delivery, the gap that it has disrespected, it has to come back and use it as an inverse. I like those type of setups where, let's say this was a huge gap, I want to see the market disrespect it, come and use it as an inverse, and then propel and then take off. So I saw that we have a confluence of this gap here and the big one here. Okay, so I wanted to see how the market closes relative to this gap. I saw that we just entered this market with a wick, sweeping this swing low, then we closed here. This was my first entry, and then the market came back to this level. Okay, the market came back to this level by the gap, and then it respected it. I saw that it's holding price. Okay, and then if you check again, we had a break of market structure right here. Okay, so this is a swing high, a swing low, a higher swing high. So this is broke structure, and it was able to hold price. Price was not able to go below this low. Okay, so my stop loss was here. I updated it from down there to here because I saw that we had a break of structure, so I didn't want to see the market go beyond this low. And then we consolidated for a moment. We broke another structure here. Okay, I saw that it was also in confluence with this. If you check again, we have a gap here which we disrespected, and then the market used it as an inverse to propel price once more, which is also in confluence with this last gap here. See how the market closes above the 50% zone there, and then we had another break of market structure here. Remember, I'm looking at how the market is approaching that buy side liquidity. You see how it creates, it engineers, takes out the liquidity, engineers, takes out the liquidity, engineers, takes it out later. So it creates swing highs, takes them out later, swing highs, takes them out later. I saw how the market came back to this gap. I saw how the market came back to this gap once more. I think it's all about connecting the dots. I use this gap because we had a break of market structure here. We came to discount. Okay, there's nothing which I can utilize on this leg why the market came here. So what do I also see which is in discount of this big move which broke structure here? We have a gap here, we have a CRT here, and then the market takes off. I think I still have what's this, the execution. Let's see. You see immediately after this candle closes, this inside this candle's range, it's an entry for me. And then I want you to also observe how I was managing this trade. I told you that one of the most important things to do is also manage your trade as it moves. Just because I'm saying the market is gonna come here does not necessarily mean that it will clean this high. But at the beginning we were right. We see how the market moves up. So as time moves, it's advisable to take some partials, secure some partials, update stop losses to the appropriate positions. Don't just update any stop loss to any position. But it's a learning process. We learn, we move. So we take partials as the market moves. And then finally my TP was hit, you see there. Okay, this was actually a beautiful trade, simple, but it actually just took time to outline itself. But yeah, the market is not smooth always, but yeah, that's what I have for you guys today. I talked about Wednesday price action. Wednesday I think I bought, yes, which is the video which had no sound. On Wednesday I was watching how the market and what the market does, how the market is behaving. My eyes were also on this relative equal highs. So that Asian high plus this New York high, for me they are relative equal. Okay, and I'm watching how the market reacts here. What I see is that you can see this is a very bearish model, but the market disrespected it. I think it did form some sort of like divergence, you see, but here sales were successful. But on SP500 the liquidity was swept. Okay, how did I frame the trade here? Let me just show you. So I saw that we have a new day opening gap here. The market closed there and then it opened somewhere here. I'm analyzing with my tablet. It's hard to like sometimes to pinpoint specific structures. I saw that we had a new opening gap right there. We had a new week opening gap right there. Okay, remember relative equal highs. That was my eyes right there. Okay, and above there's also sell side liquidity here, buy side, which I wanted to see if the market is willing to go there, but it was actually otherwise, vice versa, not necessarily vice versa, but the market didn't actually, you see, we were right, but the market did not it didn't go up there where we anticipated it to go. It did not, but at the same time it did go up. So if you took some partials, you are safe. I saw that we came to the new day opening gap. We disrespected this gap right here. We disrespected this gap. This is a bearish gap. Under normal bearish circumstances, I'm expecting this gap to hold price. Okay, but we disrespect it and then we reject it as an inverse. for me that was a confirmation that okay, now market is moving away from that gap after disrespecting it, after trading into the new day opening gap during New York session, and then the market took off from there. I think you can see how that setup is, and this setup was actually where I think I took this one if I remember well. No, this was yesterday. On Thursday, I mean Wednesday, where are you? Usually here where we so you can appreciate how price moves. It's all about reading it, and if you're wrong, you're wrong. What can you say? So this was against the trend, the overall trend. Okay, so it actually provide a quick move, but yeah, that's it. We disrespected a bearish. We entered a new day opening gap. Okay, and then we started to show some rejection on a higher time frame. When we zoom into a lower time frame, we see that we disrespected a bearish gap. Under normal circumstances, this has to remain a breakaway gap according to the way I read price. I would have wanted to see this remain a breakaway gap and then this propel price down, but instead the opposite happens. We expand through this gap, and then we retest it, we reject it twice, and then we move away from it, eventually clearing that buy side liquidity right there. Check how the market accumulates after just clearing the liquidity. This is accumulation, and then from there market it fell, but I didn't participate in this move. It's not clear for me. I think it was during New York lunch, so it was post New York lunch, but the accumulations occurred during New York lunch, so you can just appreciate how price move. So that's what I have for you guys for today. I hope you found this video helpful. If you're new, hit the like and subscribe button for more content to come. So yeah, it's peace and love. We'll see how next week behaves. We'll see how next week behaves, what it has for us. We can just, for now, since market is closing, I don't have much to say because I don't know what the price is going to do next week, but are we ready for a reversal? I don't know. We'll see during next week if the market It's ready now to move. This is where we are now. We're trading inside this gap. If we close above it, it may be another hint that we are up. We're going up, but remember we still have another one here. If we close above this one and above this red candles, definitely we are going up. But so far we will see everything on Monday. I see a setup here. SMT divergence. Okay. New York afternoon. You get an SMT divergence. Nas is expensive. It's strong compared to SP500. Ooh, this is clean price action. We create one. We have a CST here. We get a CST right there, man. We didn't retest this gap below, but we utilize this one as support. Check. The market enters that area, it rejects it, gives you one more this is nice, this is smooth, this is perfecto. For me, this is nice price action. We had an accumulation before we went down there, so you can also use that as TP, but we are not there. We'll see to Monday. I'm signing out. Peace and love. You can just see how nice prices is moving. Wow, amigos.